All right, so we'll take a look at the STS, as well as we'll take a look at a little bit of a strat lab here and an introduction to a couple of different models. Now, Larry, if you've got an opportunity, if you'd pop over, maybe update me with an email of what you've seen in the last couple of weeks here so we can get resynced since summertime. Okay, so I've got the level 2 STS strategy right here, gang, applied to S&P 500. Okay, so we'll get resynced, ready for Q4, and we'll make the 2 adjustments. Now, I've updated the strategy 3 times, and the most recent update was sent out to you via email. I've got a corrupt file on my system, so I'm going to have my programmer come onto my machine after today's session, get that guy fixed so I can import the new strategy. But I've got a new strat that'll be RSI based that'll come out to you. It'll be level 2 as well. And then again, right here is the classic. Okay, so this is the classic STS. Now, what we've learned so far is that based on the ROE for the level 2, we're getting in 1 bar late, number 1. And then number 2, we are looking to employ the chop stop that allows us to buy or sell 1, 2, or 3 ticks above or below the high or the low of the qualified signal bar. Okay, so 610 tick. Now, we talked a little bit about reviewing some of the strategy. We'll take a look at the tendencies. So if we pull this back together right now, I've got the level 2. Now remember, with the level 2 strategy, typically it's either attached to an ATM or the base ATM is built in, but it does not allow for the back testing. I can come here and I can see what's happened historical in real time for the time period that's on the chart, but I can't use the strategy analyzer to test it. So there's the S&P 500, and then what I'll do is I'll show you the numbers. Now again, we've got to take a look. You can see that the number of trades is high, 196. Okay, so if we added in $10 per round turn for slippage and commission, it's going to take our numbers down to $700 net. Now that's a little high, but we will get slipped. As Larry was mentioning, this is the S&P. It's a much thicker market. Couple things that I note. Number 1, short trades 2-to-1 over the long trades as far as profitability, and yet you can see here 50 fewer signals on the sell side. So I have fewer trades and more profitability with a higher win ratio. So the market seems that it's declining faster than it's rising. Okay, let's go take a look at our graph. So visually we see that we ran up from 821 the first 6 days, had a nice pop in equity. We'll move this to currency. Then you see that from the 27th through the 8th, right here, we had a period of sideways equity. High probability that because this is a trend following type model, the market was moving sideways with no directional follow through. Then from the equity peak right here, we tested it again here. We made new structure highs here on our equity, and that takes us to the gross numbers that you see right there. Okay, now I can come in here. I don't need to look at executions, trades. I can look at periods. And right here, I can take a look at a couple. So I can see my dailies. And you can see that we've got more winning days than we have losing days. You can see my largest loss, minus 437 right there, minus 862 right there. So if I threw out my largest losing day and threw out my largest winning day right here, that'd only be about a $250 discrepancy. So it's not going to have a massive effect on the overall performance. Now let's come in and take a look at the system itself, and let's just take a look at targets and then trail stops. So from the entry right here, you can see that we're in a beautiful bull continuation pattern. We had a nice retracement trade back into our master Mo, and then this does exactly what we want it to do. We want to see this market pull back in a bull move. You can see the internal strength indicator drops below 0. And then right here as we rally back above, we've got our master Mo bullish. Our paint bar study goes bullish. Internal strength goes bullish at the bottom of the chart. It generates the buy signal, and the profit target right here literally catches the highs. And if anything, our trail stop right here may have been a little tight. So the trail stop right here gets us taken out of the balance of the position, which frees the strategy up now to re-enter the market. So one of two things happen. A, we re-enter the market, and then we go and we grab the target right here. Okay. B, we get back in right here. The market fails. Again, I want you to note something. See this right here? See this previous swing high right here? The market failed right here, and we generated a loss. And then we retested this area right here. So buying the retracement, a retest of that level pays. We pull back down. If we had not gotten stopped out right here, that would have left the strategy long, and thus we would not have generated the additional long entry here. Although our criteria were met, we wouldn't have seen the additional long entry. Okay, so the system basically looks at it because we don't have a re-entry while we're in a current position, and basically it's an if-then statement. So it says if Kerpos is +1 or -1, then we have to wait for the strategy to exit. If Kerpos is 0 or flat, then we take the next trade. Okay, so we've got a couple of key things that we can gather from this information. Number one, I prefer the pullback and retracement trade. We get in after the depth of the retracement and then a continuation move on the momentum right here. When we get this pullback right here back into this master Mo, it's likely to provide support. And then just a retest of the previous structure resistance or the swing high in market structure pays us right there on the target. Number two, a continuation move right here. Okay, let's look left right here, and you'll know that we had an exit on close, and then right here the strategy had not been turned on yet. So we missed this directional move, and then right here my time of day turns it on at 7:30. That's the next qualified signal that occurred after 7:30 a.m. Central Time. And so it immediately puts us into this position. Look left. You can see after we've had this massive directional move. So as you take a look right here, you see we popped up here. We got target 1, pulled back down. Here's a long entry. Now there's a continuation trade right here. Target hit. Right here, we pop up here. Target hit. Hang on one second, gang. Have an impulse to a new structure high right here. And again, remember, gang, use this verbiage. This verbiage, I'm telling you, will help you dramatically, tremendously. So get that internal dialogue down. So I call this a bull rotation. And again, I've been teaching this as a first strike trade. Okay? And that first strike always is going to occur as a result of a shift in momentum. So let's look at what happened prior to. We have a first strike sell right here, and the market's declining. Okay, our master Mo goes bearish. The bars are primarily black versus green. Internal strength is below our 0 line. Then right here, for whatever reason, we have enough of a shift in momentum that price action now breaks the structure. We pop to new structure highs, and we've got confirmation from several different technical studies Number one, our bars go green, so we're trading above volatility. Number two, the master mo goes bullish. And number three, internal strength rallies back above the zero line, and you can see that it spends the majority of its time in the rally above that zero line. So that first strike or that bull rotation is a shift from this bearish momentum. An impulse move breaks structure to a new structure high, bullish momentum. The expectation now is we'll go higher low, retest to the previous high, new structure high. Higher low, retest to the previous high, new structure high. Higher low, retest to the previous high right here, new structure high. And we continue. Now, we talked about wave patterns throughout the PCG lessons. So we look at this. Normally, this is impulse wave 1. We get our 1 to 2 retracement. We want to buy at or near 2. Then a lot of you would look at this and say that's an A, B, C pattern in the 2 to 3 wave. All I'm looking at is, did we make a higher high with a higher close here? Yes. Here's the retracement. Now, two different types of signals. This signal right here that takes place after the pullback is my classic buy 2, buy 4. Okay, so what does that mean? And this is part of what we'll look at on some of the work that Connors and Alvarez have done. I've been using RSI, teaching it, but primarily to help identify periods of overbought, oversold conditions for a counter-trend divergence type model. But relative strength can be used a ton of different ways. So previously we looked at relative strength, we looked at double smoothing RS, we looked at different types of RS, we looked at relative strength crossing above a higher time frame RS. Right here, we're going to look at trading with the direction of the trend. So if I say I want to buy 2 and buy 4, basically all I'm going to say is we want to identify bull markets, then we want to buy the cycle bottoms at 2 and 4, assuming a real basic 5-wave pattern. And a couple of criteria need to be met. We need to make a new structure high here, and we need 3 different technical studies to show us we've gone bullish. From that new high, we need to fade back down here. Okay, so again, you can take a look. What do directional moves tend to look like? So inside of this directional move, here's impulse wave 1, 1 to 2 pullback. From that 1 to 2 pullback, this is typically the lowest risk point of entry. Now what we're going to look at is a way to identify that directional move, that first strike bull rotation, and then identify ways that we can say, okay, this is a likely swing low in the start of a bull continuation pattern. Now let's take a look a little bit more closely. We're going to look at here what internal strength looks like. Now with any type of momentum indicator, MACD's relative strength, a literal just pure momentum indicator, RSI, the internal strength indicator is judging the internal strength of the market based on some relative indicators. The bottom line is, as this relative or internal strength declines in the pullback, you see we make a low here, followed by a lower low here. And yet the low here is met with a higher low here. So that is the basic visual showing bull divergence. When we have an equal or lower low in price and yet a higher low in whatever our momentum measuring indicator is. In this case, we have less bear strength based on the internals here than we did here. Thus, it's bullish divergence. This could be an RSI. It could be a stochastic oscillator. It could be a MACD. I love these types of trades. So, right here is where we turn back to our SOS 3 and 4 buy. And we get long at the open of the next bar. Immediately we go hit our target. And then you see we're barely dinked out right there. So I look right here and I say, okay, what would have allowed me to stay in this position a little bit longer? Survey says wider stop. So that's one thing to consider when I look at the visual tendency that I recognize right here. Had I had a wider stop, I would not have been stopped out on the balance of the trade right here, which would have allowed me to stay long through this directional move. So if I widened my stop, I would have exited up here on the second contract instead. Now let's look at the potential downside. If I had a wider stop here and I did not exit right here, that means that the Kerpos was still +1, that my position was still long the market, and thus the strategy was not freed up to get me long right here. Now, when I got long right here, we bought them at 61.50. I go up here for profit at 64, 2.5 points, $125 S&P 500. I make 2 points over here, which is $100, so I missed a $250 winner trading a 2-lot on this one occurrence. Now, had I not exited here, and let's say my fib dot trail stop was wider, instead of 26.18, let's say it's 36.18. So my fib dots would have come in around right here, which means that from my original 16.58 quarter entry, instead of exiting right here on the trail, I would have exited around 63, pulling another 4.75 to 5 points out of the second contract from the original entry. Okay, so one change in one parameter produces this result. So we talked about widening the stop, and remember that's the trail stop on C2, which is contract 2. We reduce number of trades, which means we have a reduction in trading costs. Number 2, we wind up with basically the same P&L from the trend, because we would have made about the same on the single contract trailing the market here as we made on adding 2 more contracts back in here and here. Okay, so again, I want to be sure that everybody's clear. We buy 2, target hit, out on trail stop. The strategy is now freed up for our next qualifier. We go through a full rotation. We require that we see bear rotation on the bars. So we go back-to-back black candles. Internal strength drops below 0, resetting the strategy and preparing it now for another long entry. When our conditions are met again for the next long entry, we're freed up and we buy 2 more. So we go buy 2, cover 1, cover 2. Buy 2, cover 1, cover 2. Total contracts traded, 4. Versus if I bought 2, covered 1, and then widened my stop, allowing me to stay long here and get stopped out up here at around 63s. Contracts traded, 2. I'm still in the market for the same basic period of time. You see that there's a period from 8:34 to 8:45, so about 11 minutes right there where my money was at risk in the market if I would have widened the stop on that trade. Okay, so again, we're looking at a visual tendency. We note, we get an impulse move. All of our indicators rotate, showing bullish sentiment. We then retrace. During the retracement, we lose 2 of the 4 indicators, and now the strategy is set up for the next qualified buy. We have a return to bullish momentum. All indicators are firing bullish, telling us go long. We recognize 2 things here. We see A, our static profit target is hit right as the market makes these higher highs and then starts a slight pullback. So if our target right here was much tighter, we could have gotten out here and missed out on some of this possible directional movement there. If it was too large, then we would have rallied here, not hit our target, and then possibly taken advantage of this. We also noted that on the pullback right here, the retracement, we got stopped out right at the fib dots. So had we widened our fib dots, our trail stop would have come in at here, and left us long on that position. So two things right there with tendencies. And in this particular example, we see an impulse wave 1 followed by the 1 to 2 pullback, and then our first long entry right there inside of that 2 to 3 wave. Versus the pullback here, the market drives to a new structure high. We do make a higher low right here with a color rotation, but this is a little bit more of a momentum trade. You see that we don't settle all the way back down to the master mo. Now on this momentum trade, because it was near the beginning of the trend, so I want to make sure this is clear to you right here. What I found in every trend following strategy I've written, co-written, or bought, reviewed, studied, when we take a look at a basic directional move, there are periods where we reach a point of directional market movement exhaustion. Okay? So this is pretty phenomenal right here. We take a look at the swing low that occurred, the lowest low after our bull rotation first strike buy. So let's call it 1656 S&P. This market then double tops at 1671. So we have a 15-point move in the S&P 500, which is about 100% ATR, that takes place in 4 hours. Now, is that likely? It's not likely to continue to occur. But the question is, in that type of move, how did the directional system do? So you'll see here, again, this is like I always talk about, taking my Range Rover versus a Porsche. Quarter mile, the Porsche is going to clean me up. If I go climbing, I'm going to clean it up. The right tool for the right environment. So during the trend, in 15-point directional move, we had a buy winner, we're 1-0. We had a buy winner, we're 2-0. We had a buy winner, we're 3-0. We had a buy winner, we're 4-0. We had a buy winner here, we're 5-0. Now you see we missed some of this trade right here. We had a color rotation. Well, what's wrong, Todd? What happened? Well, time of day. You see this is the London session. Our strategy is not trading, we are sleeping right here. So I could go back in and you can see right here we had our color rotation. If the strategy traded 24/7, we would have been buyers right here again and participated in this beautiful move as well. Instead, our time of day turned us back on over here. We got the color rotation right here, and now we see our first loss in this directional move. Now, what do you recognize about that loss? Number one, I want you to recognize here the distance that price is away from our master mo. Okay, so part of my relative momentum series indicators are based on some of this analysis. So if we saw a Keltner channel or Bollinger Band, right here is where the price squeezes and moves inside of the Bollinger Band or inside of the Keltners. Right here we see that price expansion. So again, what is common and typical in price, we go to a high here at 119 US session afternoon. And from 1672 basically we pull back down to 68. That's only a 4-point pullback. And we remain sideways inside of that channel until 12:30 in the morning the next day. Well, it had been a massive move prior to that. So everybody that had gotten long back here from the original entry, rather than see a bunch of wild profit taking up here and this market pull back 35 to 50% of the rally that we'd seen, they held it against the highs, which is a sign of strength. Typically, what we'll see is, and I love this on a trading session, especially in the U.S. equities, if we see a big sell-off throughout the day, there tends to be a short covering rally in that last 30 to 45 minutes. So it's the day traders or the swing traders not wanting to take their product home that night, not wanting to remain short the S&P, the Russell, the NASDAQ, Google, whatever it might be. They've had a nice big directional move intraday, and so they start buying to cover their short positions. Short covering rally. It's not nearly as likely on the buy side. Again, most people tend to be biased to the buy side, and yet markets drop twice as fast as they rally. Okay, so what I wanted to discuss here was to show you those tendencies. So one of the things that we took a look at is an additional filter. Number one, if price exceeds X number of points or a percentage from the band, then don't take the next buy signal. So you can take a look here. Look at where price is relative to, think about relative momentum. Where's price relative to my master mo when this buy signal occurs versus this buy signal? Where's price relative to the master mo when this buy signal occurs versus this one? Not only that, but when price gets out to this highest level, and you can see the largest amount of separation from the master mo right here, you see a couple of other things are present. Okay? Let's take a look. What was my internal strength reading right here? 60. Remember, gang, on that internal strength indicator, when we hit 50 or 55 in a bull market, we can tell the system now start to trail stops more aggressively. Now follow the logic here. If internal strength, IS, is equal to or greater than 50 or 55 as an example. So what I've done is I've created a parameter or a variable. Then I want to take what action? Trail stop moves to what? So let's just say that we've been trailing the stop at the 2618 fib dots. Now we're going to move it to 1.618. Or we could even do it based on a static number. Okay, we could say trail stop 2, and then we could make this a static number. And this might be 4 ticks. Okay, if internal strength hits plus 55, then trail stop 2, low of bar, and then it would be 1 bar ago. Because we've noticed in our historical testing, trading, and we're looking right now and we're just calling this a visual tendency, we notice, hey, when we hit right here at 35, well, we've still got plenty of room to run in that trend. But when we hit 50 or 55, we tend to see this peak. Now again, did it completely stop? It did not, but we did see a 4-point pullback. So if we can find occurrences, tendencies in the market or tendencies in an indicator, here we are right here. There's positive 55. Now again, this is during the London session. Was that the high? It was not. Did it stop and pause? It did. So even if we tightened our trail stops, we still wouldn't have been taken out because this thing just powered higher. But then again, right here, we go plus 55 again. And what else do you see? See, we've got a significantly higher high in price. And yet here, we do not make a higher high in the internal strength. So the fact that internal strength didn't go higher with price, again, that is bearish, divergence. We now have that diverging from price. So that's a clue. So again, we tighten our trail stop, and this time you see we pull back from 1681s all the way to 77. Again, this retracement was 4 S&P points, about 23% ATR. This pullback right here, 4 S&P points, about 23% ATR. The other thing that you'll notice is when we see internal strength at that plus 55, that's why I created that IS over indicator. Now we're looking for high probability turning points. So this also helps to set up fantastic counter trend type of signals. All right, so take a look. And let's just look at what we've discussed here with our visual tendency. You see, after we had our turning point, again, a bull rotation. Then after the bull rotation, new structure high, we saw the retracement trades, we saw the momentum trades. So if I were to break these down and say, okay, that's why I originally created this band around our big Mo. So we could see a band around that big Mo and say basically what number of trades that pull back inside of this trading band around the big Mo and then generate a buy signal turn into winners. Considered a retracement trade versus those that do not. Now you can see right here the market's pulled back down. So based on the strategy, here's what's happened today. And again, this is the massive continuation of this massive directional move. This is pretty unusual. Let me get rid of this. So you can see right here we were bearish. So from these lows, right there, the swing low at 52, we've rallied right here to 83, 31 S&P points, 2 ATR. And we've done it in one massive directional move. So again, this is an anomaly. This is highly unlikely. They do occur, but this isn't what we're looking to capture all the time. I'm going to pull my cursor down at the bottom, right along 55 with the internal strength. Okay, so right there is 55. Look at the frequency of times we hit 55, and then look at the corresponding price action that takes place afterwards. Okay, now take a look at something else. Watch this. Again, you start to recognize tendencies. And this is from asking questions like, what tends to happen next? So we see a retracement trade right here. See this? So we went from positive 55 or 50 or higher, and then in the pullback, look at this dude down here. We go to a negative 60 on internal strength. Negative 60 on internal strength, and that negative 60 is the absolute low of the retracement in that bull move. So what I tend to do, gang, is I tend to ask myself, what's the highest probability, lowest risk point where I could have entered this trend? Look left. See this right there? If I would have bought the Master Mo right there, I could have bought that, put a 4-tick stop on that market, and yet participated in a move up to 1681 for 12 S&P points. So this was the lowest risk point of entry right there. What did my indicators look like at that time? Number one, I was still above the big Mo or the Master Mo, and it was green, so I'm bullish on my Master momentum. Number two, my bars were black, which means I'm trading below and closing below short-term volatility. Very common, right? Number three, internal strength dropped to minus 60. So I hit that minus 50 or lower on IS. So what if we did a system and said, if price, well, let's just say this. We're always talking about price this way. So if close is greater than Master Mo and IS is less than let's see. Let's just say is equal to or less than minus 50. Then set for buy. If bars go green, then buy next bar market. Now, look what we did. We created a filter. So we could literally say, if price is closing above the Master Mo and yet internal strength reaches minus 50 or lower, then set for the buy. So this would be a condition that prepares us for a potential long entry, followed by our additional 2 strength of signal. That's kind of where we are now. What if we took out the second part of that and just said, if price is trading above the Master Mo and internal strength hits minus 50, then buy next bar market. Okay, so let's expand the chart. And let's see right here. So right there we hit minus 53. So right there is the first time our criteria were met. So we literally would buy the next bar at market, giving us a fill price at around 1669 quarter. The lowest low was 68 quarter, so our 4-tick stop right here would have been hit. But we can still trade with a 8-tick or a 2-point stop in the S&P, which would be $100. Now look at the difference. If I require that A, price closes back above our fib dots, giving me a green bar, and B, my internal strength rallies back above 0. Remember, that's an additional filter that we're requiring to give us more proof or confirmation through these 2 additional indicators based purely on price. Then we would look at getting long right there at 1670.50. So the upside to just saying if this then buy, we get in at a better price point. The downside is there will be times when it comes back and it goes minus 50 on internal strength, then minus 52, minus 55, minus 61, and we get stopped out immediately because there is no filter. So that's what we're going to be looking at as we continue to study the internal strength and then relative strength. And we're going to look at a very, very basic regime filter, a basic trend filter, and using that just to identify maybe 2 things that identify what's the current state of the market. Is it bullish? Is it bull consolidation? Or we can also look at the slope. Again, notice right here. See the slope of the MA right here versus what it looks like here. So obviously, again, price is accelerating faster here than it is right here. So if Master Mo's slope is greater than X and internal strength meets minus 50 or lower, then buy next bar market. Again, right there's our minus 50. And you can see we're buying at or near the absolute lows of that move. So we'll take a look at this, and I want you to review 2 different posts. We'll look at it with the internal strength, and we'll look at it with relative strength. So I put these up on the website for you to check out. So take a look at those, and then I'll get the code out to you for one of the indicators and strats that I've built, and then we'll pursue this line of thought process in our next one. So this is a makeup for Friday, and then we'll do Thursday for this week. So we'll do Thursday at 10 a.m. Central again. So what I'd love to see is your input, ideas, thought processes, and questions on the content. So go ahead if you have any questions right now that are front of mind that you want to cover or discuss, and you might be able to introduce a thought process on my side. Yeah, and while you're doing that, if you got anything to come up with, go there, and let's just take a look. At a couple of the broader markets. Anybody got any stocks they want to take a look at? This GLD is perfect, gang. See this right here? Again, bearish sentiment. Now, our RM major is still fully bearish. But what does this market look like in that bear continuation pattern? Lower high, new structure low, lower high, retest of the low, new structure low, lower high, and then here we cannot get back down. And instead, we rally back up and we take out this previous swing high, or basically trade right to it. More importantly, you see our RM minor for the first time in 2013 has rallied back above zero. So if we get the bear rotation here, we go back to back red, that would issue a sell signal. We'd be full on. So interesting area right here. Let's go take a look at a couple of others. Now, bull continuation. Again, look at these beautiful signals. See this right here? Look at the tendency. We've got solid bull continuation, RM major. RM minor pulls back. We get our turning point black tip, and then continuation move to new structure highs. We get the pullback, turning point black tip. RM major made new highs right here. Boom, market goes to new structure highs right here. Pullback right here. RM minor, bear rotation, turning point black tip. Okay, let's go look. Now, take a look here. Okay, see the tendencies. So at the time, Apple's in a bull continuation pattern. The market's been making a series of new structure highs and higher lows. Okay, so we pull all the way back right here. RM major fully bullish. There's my impulse move to the new structure low. So you can see from the swing highs at 706, the market starts the dive. During that, it takes out the previous swing low right here. So basic structure analysis. Here's our higher high. Look left. There's our previous swing low. We trade through our 26.36, 46.18, closing well below. RM minor gives us the full bear rotation. Now, inside of this bear move, what tends to happen? From the new structure low, we do an outside return, lower high. Then we anticipate a retest of the low or a new structure low right here, lower high. So each one of these previous swing highs is holding all the way down. And then right there is our full bear rotation. And that occurs at around 460. From the 460, we decline all the way down to 390s. And now you can see we've just had a pop. So you note right here that we put in our final symmetrical double bottom. And then this impulse move has broken to a new structure high, breaking that previous swing high right there. If I want that RM major to respond a little more quickly, then I just change my two primary settings. You see my RM minor has gone full bullish. Bars are white. We've traded above even our 46.18 fib dots. So we're trading above, closing above 460% of volatility. RM minor has shifted back north. So this would be an aggressive buy where we don't have the benefit of our RM major. Yeah, let's take a look at the spider. And again, you can take a look at this. Let's go out to the weeklies. And just use it as a higher time frame type setup. So again, let's take a look back. So knowing what we discussed today, we talked a little bit about divergence. See the market right here make a slightly higher high in price, and yet internal strength, or I'm sorry, RM minor made lower highs. Potential shift. We pull back down our previous swing lows at 142, hold. Right here, we're testing our 46.18 fibs at 140, testing the previous swing low here, potential rollover. Boom, right there, we get the lower low, lower close. So if I've got a retirement fund, then at this point right here, I can exit and now wait for the next qualified buy signal. If I sell stocks, then I could sell the spider, get short, or I could buy puts. And that gets us flat right before Q4 of 2008. Then right over here, we get the re-entry signal at around 109. Again, this is more aggressive because our RM major is still bearish. And then on the weekly, you can see, obviously, even if we didn't buy here, here's our first pullback. So let's take a look at the movement that's occurred since that time. Again, gang, take a look. What happened? Here's the end of move. We had bullish divergence on internal strength, bullish divergence on relative momentum, RM minor. But from there, what happened? Break structure, new structure high, followed by the anticipated higher low. Retest of the high, new structure high, followed by the anticipated higher low. If we looked at the weekly spider, Qs, gold, silver, any ETFs that you want to track, any individual stocks that you want to track, and looked at the same basic information that we just covered right here, you're going to see the exact same tendencies. And from here, we retested the high, higher low, new structure high, higher close weekly, and then gone pecan straight north. And again, if all we did was got back long right here, where we had back to back right here, would have put us long at around 134. The maximum pullback right there was a $26 move against us. Did not take out our previous swing low. And then so far, maximum favorable excursion has been $37 for us. All right, so think in terms of bull continuation patterns. So first, identify trend and strength of trend. We're going to take a look at both relative strength to pick these swing bottoms right here, and we'll take a look at internal strength as well. You can review those articles, and then I'll get you this new code. This will be a zip file initially, again, until we get it solid, and then we'll put it on the licensing server and get it out to everybody. All right, gang. 10 o'clock a.m. on Thursday, we'll do some continuation here. And again, email me your ideas and thought processes and questions. We'll cover those as we get started and go through that new software. Until then, trade them up, and I'll see you Thursday. What's up, brother? Hey, dude, I just wanted to grab you. Yeah, I tried to install that previous deal you sent. That created an issue, and then I could not install the other one that you sent. So I think it was the update to the high-low, and that high-low still isn't working. So I'm going to let you basically just take over. Let me go see what's up with TeamViewer. You want my ID? Okay, 694 074 251. Here, I'll pop it in here for you. There you go. And then I'll get it started here like I want to download. Let me know if you can see over there on the right-hand side, NinjaTrader. Let me go find the control panel. Oh, geez, I got to stop this recording. How do I do that? F10, is it?